Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So as you know, every single quarter we get a chance to see what the super investors are buying and selling. And the reason is because they have to disclose that information to SEC to tell basically them that what they're buying and sell, so on. And there's a website where basically this information gets published. And what I'm going to do today is I'm going to tell you exactly 7 companies these guys are buying. The super investors and hedge fund managers, of course, manage a lot more money than us, but it kind of has, gives us an idea of what they're buying, what they're selling. Last thing you want to do is be copying them, because sometimes this information is actually backward looking, if you know what I mean. So last quarter is basically what they're reporting to us right now. So by then they might have made hundreds of billions and sold it already, or might be still holding on to it or whatever. So I'm going to share with you 7 different companies that they're buying. But before we do that, as always, if you can join us with the Patreon account, that would be absolutely amazing, where you get access to the Discord, you get access to the family portfolio and extra other things. Now what I'm going to do is I'm going to give you a brief information about each one of the companies, and then of course if you're interested, do your own research, inshallah. And the first company we're going to talk about today is Medtronic. Medtronic is a pharmaceutical company. It's been around for a very long time. It is almost a dividend king, has been paying dividends for 46 years. I've recently sold it from my portfolio because the growth is not there. It hasn't been there over the last whatever years, and it was flat, and there were other opportunities that I felt were better. But it's still a great company. They're still expecting to grow their earnings about 5% and 4% when it comes to revenue, and very much cheap right now. It's about 4 stars right now. $112 per share is where they think the price should be. There are number of basically hedge fund managers that are buying this company, or super investors are 4. So there are 4 different hedge fund managers and super investors that are buying this company right now, which is quite interesting, because it's been down quite a lot for the last whatever years. In fact, if we look at the summary of the company, what you'll see for 1 year is about 7% up, and when you look at the last 5 years, it's actually down 24%. And for me, this is one of the reasons why I sold this stock, because it actually hasn't done anything for the last 5 years. And the dividends is okay, but sometimes you just need that price appreciation, and I felt like there was other companies out there that were slightly better. But in terms of dividend growth, we're looking at about 7% over the last 5 years. And when it comes to the revenue side of things, basically return on invested capital, it's about 8%, which is fine. They have excellent free cash flow. So it is a great company, but it's just one of those slow growth companies over the last whatever years anyway. The next one is Thermo Fisher. This is again another company in the pharmaceutical company. It's a huge company, 219 billion market cap, wide moat, and there were 3 super investors that are buying this company right now. $552 per share is where the price is now. And when we look at the fair value, $630 per share is where they think the price should be. It's another 4 star. The dividend is almost non-existent, but the growth is actually there. So 15% in the last basically 5 years, which is absolutely amazing. Latest was about 11%, which is really interesting. And you basically safety wise is 72%. Now they have excellent free cash flow of basically over $7 billion, which is really good. Now looking at how the company has performed over the last 5 years without this is just price appreciation, by the way. So we're looking at about 65%. So it's done absolutely fine for the last whatever years, and it's expected the forward PE space is about 23, 24 right now as we speak. And when we look at the Wall Street expectations, you can see about 18 strong buys, 8 buys, 6 holds. So no sales whatsoever. $664 per share is where they think the price should be. 20% upside from where we are right now. So it's another interesting business that a lot of these super investors are buying right now. Next one is Visa. There were 3 super investors that actually added this company to their portfolio, which is very interesting, because I did feel like it was a bit overvalued over the last quarter, but of course, the last 3-4 months it felt like it was overvalued, but I still feels overvalued to me anyway. Currently trading $351 per share. And when it comes to the fair value, according to Morningstar, it's $289 per share. So it's still a little bit overvalued. This is probably one of the best businesses out there. The very small dividend, 21% payout ratio, which is absolutely fine. Latest increase of 13%. The 5-year growth rate of 15%, which is really good. So if you're buying this company for the dividend yield, then you are wrong. But if you're buying for the dividend growth, which is the reason why I bought this stock in the first place, and the price appreciation and so on, then you are absolutely fine. So the 16 years of increase in that dividend, which is really good. So that consistency is what you need, the fact that they're increasing it every single year, and in 99% safety, which is absolutely huge. Check this out. When it comes to profit margin, return on equity, return on invested capital, probably one of the best out there. And look at this free cash flow, over $20 billion. And they're expecting the earnings to grow about 12%, revenue about basically 10%. So another great company. Now looking at what Wall Street is saying about this company in terms of the expectation, in terms of basically price wise, rating side of things. So strong buys, up 20 strong buys, 11 buys, 6 holds, and 1 sell, and basically about 6% upside from where we are. $371 per share is where they think the price should be. So another really great company, but I think it's slightly overvalued in my opinion right now. The next one they're buying is Uber. 3 super investors have added this company to their portfolios. They might have sold it since, so we just need to be mindful of that. 157 billion. This company is growing every single year. Right now, but like I said to you guys, basically we've got 3 super investors that are buying this company. Price $78 per share. 79 is basically where the fair value is. So it's around fair value price right now. That's why it's 3 stars, as you can see here. Of course, they don't pay any dividends yet. Profit margin, return on equity, really good. Return on invested capital is about 9%, which is fine. Almost $7 billion of free cash flow, which is really good. EPS is expected to decline, which I was surprised about 46% next year, and revenue is basically expected to grow about 15%. And looking at the Seeking Alpha, as you can see, Quant is saying it's actually strong buy, Wall Street is saying it's a buy, Seeking Alpha is saying it's a buy, which is very interesting. Now, if we go to earnings estimates, you will see this is where that information comes from. December 2025, they're expecting the earnings to decline about 46%, but the following year about 34% up, 24%, 18%, 21%. So there is a lot of analysts actually that are interested in this business, which is very interesting. And then you can see revenue is expected about 14% growth every single year for the next 5 years. And if we go back here to click the ratings, okay, like we've already seen, the Wall Street is actually saying it's a buy. We've got 24 strong buys, 13 buys, 8 holds, and that's probably why it's not a strong buy, but it is heading towards that strong buy right now. 12% upside from where we are. $88 per share is where they think the price should be. Right now, as you can see, it's about $78 per share. Another really great company. It's interesting to see what happens in the next few years. I think this company is probably becoming one of the best out there. So we'll see what happens. ASML is the next one that they're buying. 2 of them, basically 2 super investors have actually bought this company recently. $744 when it comes $744 per share right now. Dividend yield just below 1%. The growth is basically very, very good, 22% the last 5 years, 15% when it comes to 15 years of increasing that dividend. Okay, when it comes to annually, you get $6.33. Dividend safe to 82%, and profit margin, return equity, return invested capital, probably one of the best out there. Over $3 billion of free cash flow, 24% EPS expected, EPS growth expected next year. Revenue is about 14%. 4 basically stars right now. $88 per share is where they think the price should be. And looking at Seeking Alpha, we can see here we got 21 strong buys, 8 buys, 9 holds, and 1 strong sell. They're expecting the price to be about $920 per share. Right now, it's about 24% upside from where we are right now, which is interesting. And if we look at the earnings expectations moving forward, this is probably one of the reasons why I absolutely love this company, and I probably second biggest holdings on my portfolio. Look at this growth side of things and the fact that they monopolize that market. 14%, 12%, 10%, 12%. So every single year, and there's loads of analysts looking at this company. So really great company. Another one that, I mean, you can't go wrong buying this company. But again, please always do your own research. The next one is Applied Materials, one I nearly bought last quarter. Okay, it is fairly valued still, $193 per share, $183 per share is where it's out right now. Wide mode, great company, 146 billion market cap. Again, is one of the equipment side of things when it comes to the semis. Dividend yield is just about 1%, 18% when it comes to the payout ratio, 25% when it comes to the latest increase, and 5-year growth rate of 13%. Now, 7 years of increase in that dividend, and safety is 86%. Profit margin, return on equity, return on invested capital, probably one of the best on this list. $7.4 billion, almost $7.5 billion of free cash flow. They're expecting the earnings to grow about 8% next year, revenue to grow about 7%, 10%, and 3 stars right now $193 per share. So another one that's fairly valued. And looking at Wall Street expectations for this company, as you can see here, we've got 20 strong buys, 6 buys, 11 holds, and 1 sell. And if we scroll down, you will see $210 per share is where they think the price should be. 15% upside from where we are, which is very interesting. And if we look at the earnings expectations, which you have just seen, so about 8% into October 2025, and then after that about 11%, 7%, 20% a year after, but there's only one analyst, so you don't need to look at that, just look at the first 3. That's EPS. And then revenue side of it, about 8% every single year for the next 2 years, which is absolutely fine. So overall, another great company, to be honest. And final company we're looking at is energy company EOG, which is company that I own in my portfolio. 70 billion market cap. Narrow mode. 2 investors or super investors actually bought this company last quarter. $130 per share right now. 3% in dividend yield, which is good. 30% payout ratio. 7% latest increase, and 33% the 5-year growth rate, which is probably one of the highest in my portfolio. Dividend streak of 6 years, so they've only been paying for the last 6 years. You get about almost $4 for every share of this company that you own. 80% when it comes to dividend safety. Profit margin, return on equity, return on invested capital, probably one of the best out there. $6 billion of free cash flow right now. They expected the earnings to grow about by 0.22%, so not much there, but things can easily change as basically these companies depend on the price of oil and so on. But the revenue is about basically 2%, and as you can see, it's 3 stars right now. $126 per share is where they think the price should be. Right now it's $130, so it's slightly higher than that. So that's the 7 companies these guys are buying right now. Again, don't just go away and buy these companies. Please do your own research. As always, I use it just for entertainment purposes, and also I try to make sure that I do my own research instead of buying. And like I said, this is backward looking, so this is the last quarter. They might have sold it already, they might have added to it, whatever the case might be. And as you can see here from Sharia compliance side of things, really nothing to worry about in any of these companies, but that based on the Zoya standards that they use. So that's the 7 companies I wanted to share with you guys today. I hope you're enjoying this type of content. If you are, please don't forget to join us at the Patreon account, where you get access to a lot of things, including the family portfolio. Have a wonderful day. Assalamu Alaikum.